What's up, guys? Good evening. How are you guys doing today? Can you guys hear me or see me? I am supposed to be streaming already, but per usual, I cannot see myself. So, there you go. So we are live. Welcome back, guys, to another live stream. I guess that, there you go. There you go. Radio Bilingual Stock Market channel is on the air. MG Munoz 88. What's up, bro? Jared, great guidance in the Discord today. Awesome, bro. Awesome. Thank you. Thank you. Audio Dynamics. There's a deeper care DG. Welcome back. Darren, what's up, bro? Guys, so please drop a comment down below. Let me know what stocks you guys want me to go over. In the meantime, I am going to make a summary, a short summary, I should say, about what happened today in the markets. Tomorrow we have monthly options expiration. So that's a day in which usually weird stuff happens. Is it going to happen tomorrow? We don't know. It could be the case. Today we had, to be honest with you guys, some sort of boring, narrow ranging day. So there was not really much to do today. That might not be the case tomorrow because, again, we have OPEX, okay? Monthly options expiration. So Summer Cunningham, Walmart. Wow, that stock got killed today, guys. I went over the report. It was a decent report, you know, but the stock got killed. And yeah, I mean, most of the stocks that have posted earnings this week or throughout this week have gotten killed, and Walmart wasn't the exception to the rule. Okay, so we had some sort of mixed day, flattish day in the main indices. And something that is worth pointing out is the fact that the Russell 2000 went down today once again. It went down 1.52%. And because of the fact that the Russell 2000 went down today, guys, we didn't have a healthy participation, let's just put it that way, when it comes to the majority of the stocks that trade publicly in the US. Take a look at this, guys. Today we had 7,427 decliners and 4,590 stocks going higher or going up. And the S&P 500 went up today 0.12%. You guys know that the SPY tracks the S&P 500. But once again, we had just a handful of stocks doing the heavy lifting. I think that Microsoft reached a brand new all-time high today. So Microsoft went up, and Apple had a good day today. But when it comes to the majority of the stocks, we didn't have a good day today because obviously, guys, small caps went down today, as I just told you. The Russell 2000 went down today 1.52%. The Nasdaq went up 0.07%, and the Dow Jones went down 0.13%. If I take a look at the 11 sectors that trade inside the S&P 500, take a look. Not a good day because we had, let me count them. Count them up. 1, 2, 3, 4. I mean, four sectors going down. But the three most important sectors inside the S&P 500, guys, and this is something that you should know. This is general information that you should be aware of, are technology. This sector went up to the 0.50%. We can make the case that this was a sector that actually did the heavy lifting. Healthcare went up to the 0.43%, and the financial sector went up to the 0.40%. But again, the fact that small caps went down today once again, that represents some sort of warning signal. Let's just put it that way, that maybe in the short term, the markets are kind of, let's say, putting some sort of top short-term top maybe in the next few days we can see some sort of little retracement. So, you know, the current situation of overextension that we are seeing in the markets can get fixed, and then we can go higher. And the best case scenario would be, if that were the case, the best case scenario would be small caps or the Russell 2000, the IWM, leading the way of the markets, which is not obviously the case as of now. So if we take a look at the SPY, let me pull up here a 4-hour chart. I have some requests over here. Micro Tragedy and Grayscale Bitcoin. Yeah, that's fine. Tesla, Eli Lilly. What a beast, Eli Lilly. It got healed today, by the way. Did Lilly close the trading session today in the green? I don't think so, right? Let me see. It went up. Now I'm pretty much flat. Okay, I will go over Eli Lilly. Not a problem. After reviewing the SPY, take a look at this chart, guys. This is a 3-year chart of the SPY. Take a look at this downward sloping trend line that comes from all-time high in the case of the SPY. Get this, guys. The bulls failed at this trend line back in late July. This was the, let's say, year high for the SPY so far, at around $460.30. And now, this downward sloping trend line, guys, could be acting like a magnet. And the key word here is could. Okay, this is hypothetical. So get this, guys. Say that tomorrow we gap up. Let's say that tomorrow we happen to have a green day. What about a test of this downward sloping trend line at around $454.30? This downward sloping trend line could be some sort of stone cold short. If this downward sloping trend line happens to be tested, let's say sooner rather than later, maybe tomorrow, maybe on Monday, maybe on Tuesday. So we can make the case that maybe the markets are thinking about going a bit higher in order to make a test of this downward sloping trend line, and after that maybe retracing, I don't know, maybe 2, 3, 4%, and then after having found support at a foreseeable area of support, then we can keep going higher. Because if we take a look at this 4-hour chart, guys, of the SPY. The SPY has gone up in a matter of 2 weeks and a half or so, 10.20%. So this push to the upside has been very aggressive, very extreme. Some people would argue that this rally that we have seen in the SPY since 2 weeks and a half ago could be some sort of bear market rally because it's been very aggressive. So, case in point, the SPY cannot keep going higher every single day, and maybe the final destination of this super mega rally that we have seen since 2 weeks and a half ago could be this downward sloping trend line again that comes in at around $454.50 ish. So keep an eye on this level. If tomorrow, and keep in mind, guys, by the way, and let me ask you this: do you know what monthly or what OPEX is about? Because remember, every third Friday of any given month, we have monthly options expiration. So do you guys know what is actually taking place during that day? What happens is that we are going to have tomorrow, guys, $2.8 trillion worth of options expiring. That's a lot of money, guys. But I mean, a lot of money. So usually in these kind of days, again, every third Friday of the month, this is a day in which the market makers try to move the tape up and down in order to shake out most of the call options and put options holders that expire tomorrow. So that is a day in which we usually, that is a day in which we can expect big swings in either direction, up or down. And that might be the case tomorrow, so that you have to be aware of that. That is a day, that is a trading session of every month in which we see a higher volatility than usual. And you guys know that obviously as traders, volatility is our best friend, but you have to keep that in mind. So, and obviously tomorrow I am going to be on Discord letting you guys know the most important areas of interest of the SPY. So you don't need to be worried about the SPY, but as long as the bulls remain trading, guys, above the upward sloping 5-day moving average at around $446.30-ish, we were actually talking about this level throughout today's trading session. They are, in my opinion, and I could be mistaken, pretty much gathering momentum in order to make another push higher and try to fill this gap up to this downward sloping trend line that I just told you guys about, and that comes from all-time high near at around $454 and let's say 60 cents or 50 cents ish. I don't have an exact number for this downward sloping trend line because every single trading session the number changes. Okay, so this is going to be the most important area of support that you need to keep in mind. Let's say that tomorrow, guys, we open the trading session at around $446.20, a bit higher than that. If that level of support happens to be broken to the downside, that could very well represent a short opportunity. If that support happens to be broken, as I just said, to the downside, then we have two potential areas that could be acting as support. The first one, $443. This is a previous resistance back from mid-June. And below the area, we have a very important spot because at around $440.40, this would represent a big push to the downside. We have the upward sloping 100-day moving average. So in case of some sort of tiny correction, in my opinion, and taking into account that seasonality favors the bulls a lot, as of now, I would be a deep buyer, a very aggressive one. I should say near $440. Okay, this would be actually very healthy from a technical standpoint. And above the 100-day moving average, what about a retracement down to $443.50? This would represent, guys, pretty much normal market behavior because nothing can go up in a straight line as well as nothing can go down in a straight line. But as of now, and for the time being, as long as the bulls remain above $446.60-70, they are pretty much gathering momentum. And we could also argue, guys, that they are kind of working on some sort of bullish rectangle over here, as I just said, in order to try to make another push higher and finally, and this could be the final destination of this rally, fill this next gap up to $454.60-ish approximately. Yeah, tomorrow could be, we could have a volatile day tomorrow. A volatile day, yeah, that's pretty much in the cards, okay? So these are the levels that I am going to be keeping an eye on tomorrow, but again, you guys know that I am going to be calling balls and strikes on Discord, so you don't need to be worried about the SPY. Okay, let's go ahead and go over some stocks. Tesla. What is going on in the case of Tesla? Let me see. And by the way, guys, I forgot to tell you this. When it comes to short-term resistance and support, you guys have to be aware in the case of the SPY that this area between $451.50 and $450.90 has become a very tough spot for the bulls. So this is going to be the most, let's say, important area resistance-wise in tomorrow's trading session. And to the downside, watch out for $448.30. This area acted as support today. It pretty much acted as support yesterday, and it also acted as support on last Tuesday's trading session. Okay, so these are going to be the most immediate areas of either resistance and support that we need to keep an eye on. If we happen to open with a, let's say, sizable gap down tomorrow and stuff like that, you guys already know that you need to keep an eye on the 5-day moving average on this upward sloping 5-day moving average near $446.30 approximately. Okay, let's move on. Let's go over some individual stocks. Let's take a look at Tesla. It went down today 3.81% and it closed the trading session at $233.59. Take a look at this, guys. I am going to zoom in here. On the 4-hour chart, this blue line that you guys can see over here is none other than the 100 DMA, 100-day moving average. Take a look at how, guys, after having seen a very acceptable rally of something like 20%, the bulls stopped right below this 100-day moving average. That implies that this area is very, but very important. And take a look at how a few days back, this was back on October 18th, the bulls failed right at this 100-day moving average. This is a big level, guys. This is a super, super, super important moving average. So in case of some sort of push to the upside, you need to keep an eye on this moving average near $248. This is definitely an area of interest from a resistance standpoint. And if I zoom out here, guys, we have a tricky situation when it comes to Tesla, guys, because take a look. So the stock got pretty much killed today. It went down something like $9. But take a look at how the bulls managed to find support right at this upward sloping 5-day moving average, this white line that you guys can see over here. So the bulls found support at an area in which they were supposed to find support at, okay, near $230. If I zoom out and if we take another look at the 5-day moving average, take a look, guys, at how this 5-day moving average happens to also be a previous resistance back from mid-August. So the bullish trade tomorrow over here in the case of Tesla would be opening the trading session respecting as support this 5-day moving average, so closing candles above $230. We could see some sort of push to the upside, in which case we have a first area of interest of a first gap that could be potentially getting filled to the upside near $238. $238 happens to be a previous support back from late September, and this is also a previous resistance back from mid-August as well. So this would be the bullish trade in the case of Tesla. In my case, guys, or in my case, I usually don't trade stocks when they are trading below their 5-day moving average. So as long as the bulls of Tesla can hold this level, this 5-day moving average near $230, I think that we could see a bounce for Tesla and below, or let's say, let's talk about a bearish trade in the case of Tesla. If you guys see Tesla opening the trading session above $230, but on the flip side, instead of consolidating to then bounce back up, if Tesla breaks to the downside, this 5-day moving average near $230, then we have two potential gaps to the downside. The first one down to $226. $226 happens to be a previous resistance back from mid-November. And sorry, this was back from early November. I take that back. And below $226, we could be easily seeing Tesla dropping down to $223. $223 happens to be a previous resistance back from November 8th. So these are the scenarios that I am seeing over here. And from a major time frame standpoint, we can make the case that the bulls still have some argument over here, because we can see an upward sloping 200-day moving average. This red line that you guys can see over here that is signaling as of now $222. So a bounce could occur, but now let's go ahead and reconcile this technical chart with the market structure of Tesla. Let me see over here. You guys know that this is a tool that I use in order to visualize imbalances from a demand and supply standpoint. So what you guys can see over here is the demand, As you guys can see, demand, when I am talking about demand, I am talking about buyers, obviously, right? And what you guys can see at the bottom of the chart is the supply or sellers. So what do you notice over here, guys? Take a look at the demand. It is falling, whereas the supply is rising. So what is this chart about the market structure of Tesla letting us know? That buyers are walking away from Tesla and that sellers are starting to step in over here. So in my opinion, Tesla breaks this 5-day moving average tomorrow to the downside, or let's say that Tesla loses as support $230. This is a short, more likely than not. Okay, and above the 5-day moving average, there is a trade to the upside over here. Alrighty, so we went over Tesla. Let me take a sip of whatever this is. This is a Sprite, right? Okay, and let's go ahead and take a look at Lilly. Eli Lilly. What is going on over here in the case of Lilly? We are 21 minutes in. Okay, so what a beast, guys. But the beast is taking a rest. So Lilly went up today 0.04% and it closed the trading session at $588.75. I am going to try to, let me pull up here a 1 hour chart. Take a look at this area, guys. $285. Super important support for Lilly, guys. At $285, Lilly has bounced back up on 1, 2, 3, 4, and 5, 6 occasions during the last 2 weeks. Take a look, guys. And on top of that, guys, this area at around $585 happens to coincide with the 20-day moving average. And we can also make the case that $585 happens to be a previous resistance back from early November, and this is also a previous resistance back from late October. Big level for Lilly. They traded this stock yesterday with 2 call options, and I precisely bought those calls once I confirmed that $585 was acting as support. So this is pretty much the trade that I would be thinking about Lilly. And if I let me pull up here a 4-hour chart and zoom in. Another scenario would be, and this would be even more bullish, because we are talking about here the 5-day moving average, and we are talking about as well a fat number, $600, and also about a former area of resistance. Take a look at $600, guys. Remember, this white line that you guys can see over here is the 5-day moving average. Remember that for the most part, I use the 5-day moving average in order to determine who is in charge of minor time frames. Okay, in the case of Lilly, guys, this is a major uptrend. Okay, but also, or we can make the case that despite the fact that in major time frames we are seeing a major uptrend, in minor time frames the sellers have been making some sort of tiny progress over here. And why? Well, because they were able to break to the downside the 5-day moving average. So, and let me zoom out here once again. That was too much. Okay, there you go. So another scenario would be, and I would actually, guys, feel more comfortable taking this trade than taking the trade on Lilly, or trying to take a bounce back up trade with Lilly from $585. So at $600, we have the convergence of the 5-day moving average, of a fat number, but also we have over here a previous area of support back from mid-October and also a previous resistance back from mid-September. So Lilly burst above $600, and if I see it closing candles and consolidating above that level, I am, and you can mark my words, guys, I am grabbing calls. Because if that were the case, we have 2 potential gaps to the upside. The first went up to $614, an area in which Lilly failed on 2 occasions recently. And above $614, we have a potential second gap up to $626. This is a previous resistance back from November 9th. So these are the scenarios that I would be interested in the case of Lilly. And I would not touch this stock, guys, below $585. Because in that case, I think that Lily trading below the 20-day moving average, guys. I'm thinking that maybe once again this upward sloping 100-day moving average could be acting like a magnet. So the risk reward over there, in my opinion, would be a bit poor. Let's just put it that way. So this would be my trade in the case of Lily. Let's go ahead and reconcile this technical chart with the market structure of Eli Lilly. Let's see, what do we get here? And take a look, guys. We have a tie here between buyers and sellers. So the demand is falling, or we can make the case that the demand is starting to fall. Nothing crazy quite yet, but the supply is also falling, and it is below average. When I say average, I am talking about this dotted line that you guys can see over here. So we are seeing some sort of profit taking, and the fact that we are seeing the demand falling coincides with the fact that the bulls lost as support the 5-day moving average. But aside from that, the supply is also falling and below average. So I'm thinking that a bounce from $585 is likely, and Lily bursting above $600 is and holding as support this 5-day moving average is very, but very, very bullish. There you go. Okay, thoughts on SQQQ. Bro, the SQQQ is an inverse leverage ETF that pretty much does the opposite relative to the QQQ or relative to the Nasdaq 100. So I don't have really much to tell you about the SQQQ, because in that case you just need the QQQ to go lower. That's what you are gambling on by having a trade open on the SQQQ. So what you want to see tomorrow would be the QQQ losing as support this upward sloping 5-day moving average near $382. This is the trade that you're thinking about. I mean, this is the trade that you want to see. But in the case of the SQQQ, guys, it makes no sense going over the technical chart, because it is just a leveraged ETF that does the opposite relative to the QQQ. So what you want to see tomorrow, holding shares or calls of the SQQQ, is seeing the QQQ losing as support $382.50. It could happen tomorrow. Tomorrow we have OPEX, so this could happen. I mean, why not? And by the way, if you are holding shares of the SQQQ, and please keep this in mind, guys, remember that is a leveraged ETF. So any leveraged ETF, any, you name it, guys, SQQQ, TQQQ, SPXL, you name it. Any leveraged ETF is meant for either day trading or overnight trading, okay? If you hold those ETFs for longer than 2 or 3 trading sessions, you got to be aware that they decay over time. Did you know that, guys? Really? All of you were aware of that? Lily looking bullish. Yeah, super bullish. Yeah, super bullish. Did you trade Lulu last time you evaluated it? No, I didn't. I didn't trade Lulu. I actually put it on my watch list, but I didn't trade it. I'm very bullish short over here, despite the fact that the bulls closed to the take a look. So this is a very, very bullish looking short, guys. So Lily went down today 2.76%, and it closed the trading session at $420.28. So get this, guys. The stock gets killed today. Found support near $416. It bounces back up, and the bulls, as of now, after hours, are trading above the 5-day moving average, which happens to be upward sloping. This technical chart is under the absolute control of buyers. I would tell you, in the case of Lulu, we saw some sort of profit taken over here. Watch out for Lululemon, guys. If tomorrow this stock opens above this upward sloping 5-day moving average, let's say above $422, and if you guys see this stock consolidating above this level, we have pretty much $431 coming up, and this would represent a, let me see, from 424 bucks ish, let's say once we confirmed that 422 bucks is acting as support, up to 430 bucks. This could represent a 1.50% profit trade. Very good looking chart for Lulu. Let me reconcile the technical chart with the market structure of Lululemon, which is the Lulu is the ticker symbol. There you go. Lululemon. There you go. Alrighty. So, take a look. The market structure doesn't look that good because the demand is starting to retreat and the supply is rising. So, maybe say that Lulu opens the trading session tomorrow above 423 bucks. But if this support and if this upward sloping 5-day moving average happens to be broken to the downside, this could be a short, guys, down to 414 bucks ish. So the market structure is telling me to be careful here, okay? Because the demand is starting to fall, so maybe we are about to start seeing profit taking over here. And rightfully so, guys. This stock has gone up since early October. This stock has gone up 20%. So a bit of profit taking on this ticker wouldn't be a situation that we can rule out, okay? Your insight is amazing. Made good profit using your direction. Awesome, bro. That's my idea, guys. I am not going to be calling out specific trades for you guys. Instead, I just want to teach you how to fish. You gotta learn how to fish. So I am pretty much letting you guys know what you have to do. You just need to make your own decisions. And by providing you guys the most important areas of interest, I am forcing you guys to interpret the price action. And that's the most important mission that I am, in my opinion, accomplishing. Yeah. Okay, Microsoft. It hit a brand new all-time high, baby. Bro, I mean, I have nothing to say over here, Darren. Please, do not buy puts over here. Please. Guys, this is the way that the greatest amount of market participants have lost money on. Shorting uptrends, in which we know that buyers are in total control, and buying downtrends. I mean, I guarantee you guys, we have a lot of people holding Microsoft puts as of now. Woof! A lot. Why? Because the stock is overextended. The stock is overbought. You watch. This stock can easily keep going higher. Easily. So, if you try to guess stops, and I am telling you guys this out of my own experience because I lost money doing it. If you try to guess stops, you're going to be mistaken 9 out of 10 times. I swear to God, guys, don't guess tops. For me, in order to buy puts, I need to see sellers showing strength. So what would be my trade here against Microsoft, guys? I would wait for Microsoft to pull back and break to the downside 367 bucks. Do not short uptrends. Take a look at this technical chart, guys. Upward sloping 200-day moving average. Upward sloping 100-day moving average. Upward sloping 20-day moving average. Upward sloping 5-day moving average. Why would anyone short this stock? Please let me know, guys. Why? It makes no fucking sense. You need to wait for sellers to show some strength, and then you can short this stock. Another scenario would be this upward sloping 5-day moving average, guys. Near 370 bucks. Let's say that tomorrow we open in the red and the Nasdaq 100 and the triple Qs are pulling back and stuff like that. Microsoft breaks to the downside, $370. Okay, I mean, let's get some puts. Why not? It is losing the support of an important moving average. That shows me in minor time frames who is in control of the technical short. But you know, I wasn't going to be buying puts today into the closing bell because Microsoft is overbooked. Let's get puts. It's going back. Okay. You watch. So you do not recommend holding shares of the S per Q for a long period of time. You're going to lose money because that leveraged ETF decays over time. I mean, you shouldn't hold it for longer than a week. Let's just put it that way. But mind you guys, if you go over the prospectus of any leveraged ETF, again, you name it, S triple Q, T triple Q, because we have like bullish and bearish ones and stuff, go over the prospectus. It states very but very clearly, this product is designed exclusively for day trading and overnight trading. So whoever designed that leveraged ETF is telling you straight up, if you hold this for longer than 2 trading sessions, you're more likely to lose money than make money out of it. So why would you do the opposite? It makes no sense, guys. So Microsoft dropped after hours. Come on. Come on. It closed the trading session at $376 and it is trading after hours. It is actually up after hours. I don't know, like 15 cents. Do not short uptrends. Do not short uptrends. I lost a lot of money. Forget about the fucking RSI, guys. I have it here again. But forget about the RSI. Oh, the RSI is super high. This stock is overbooked. Forget about it. I use the RSI. Sometimes I use it in order to determine if we have some sort of divergences. We can actually make the case, guys, that we have a bearish divergence over here, guys. Take a look. We have a clear uptrend, or we have a push to the upside on the technical chart. And if we take a look at the RSI is, take a look, is downward sloping. This would be a bearish divergence. Am I going to buy Microsoft puts because we have some sort of bearish divergence over here? Hell no. No way. But I use it, in order to kind of confirm that we have very overextended conditions to either the upside or the downside. But I don't trade never, ever based on the RSI. Okay? That's my advice. Okay? I think that the iShip news was huge. Yeah, but you know what I was thinking about? It was big. But what about NVIDIA, guys? It went up today as well, right? So that AI chip of Microsoft is supposedly going to be a competitor to the NVIDIA's one, right? But NVIDIA pulled back on the news, and then it is bouncing back up again. So maybe the net aggregate opinion of the market is telling us that this is no a sum zero game, that both companies are going to be making money out of their AI chips, right? So it was a big news. It was big news. Now we need to wait for NVIDIA. Maybe on NVIDIA's next earnings report, the CEO, which happens to be a professional pumper, is going to say that their AI chip is way better than their competitors and stuff like that. So you never know. Okay, let's keep going, guys. 39 minutes. Okay, I already went over Tesla. Okay, if anyone wants to see my analysis, you just need to rewind a bit the live stream. Okay, what other request do I have over here? Micro Tragedy. MSTR. Sorry, guys. The name of the company is MicroStrategy. Okay, I say Micro Tragedy. All right, because a lot of people have lost a lot of money over here. So it went down today 3.33%, and it closed the trading session at $489.08. Guys, To be honest with you, I don't trade the sticker. It is too volatile for me. It is too volatile. So MSTR is beyond my emotional capability. Let's just put it that way. So I don't trade the sticker, but I can tell you about it, obviously, no problem. So let's see. It is an uptrend. Upward sloping 200-day moving average, upward sloping 100-day moving average, upward sloping 20-day moving average, and also we can see over here an upward sloping 5-day moving average. So the bulls lost a support today, this 5-day moving average. Let me reconcile this technical chart with the market structure. Do we have some sort of potential trend change over here? Let's see. And no, guys, super bullish. Take a look at this market structure, guys. So remember, on top of this chart, you guys can see the demand or buyers, and at the bottom, you can see the supply. So the demand is through the roof, crazy, and the supply is below average and dropping. But mind you, this is pretty much a stock that tracks Bitcoin in the stock market. So before trading MSTR, you need to keep an eye on Bitcoin. So say that tomorrow Bitcoin is trading in positive territory and stuff like that. If you happen to see MSTR recapturing this upward sloping 5-day moving average, so closing candles above $496, maybe we could see another push to the upside, in which case $514 could be the next destination. At $514, the stock of this company failed yesterday, and at the same level, this stock failed back on November 10th. So this will be the trade over here, and I wish you good luck, guys. I don't have the stomach to trade the sticker, but it is looking pretty acceptable. I mean, this is an uptrend, guys. Yeah, it could keep going higher, but this is a ticker that I don't actually trade. I'm afraid of micro tragedy. There you go, Walmart. But before Walmart, I have one of my favorite stocks, guys. Palantir, the Messi of artificial intelligence. I am still holding calls over here, guys. I told you, like 3 weeks ago, that I was holding Palantir calls, and I'm still holding them, guys. My price target is the moon. How about that price target, guys? I am going to close my calls when Palantir goes to the moon, baby. The Messi of artificial intelligence. Okay, it goes down today 0.90%, and it closed the trading session at $19.77. This is an uptrend. That's why I haven't closed my calls. This is a very good looking chart. And all my price targets, though, says Audio. There you go. Let's go to the moon. Ask Dan Ives for further details. Okay, so I am going to draw a line over here, and let me zoom in. So the bulls lost a support today, the 5-day moving average. They closed the trading session slightly below this 5-day moving average, but if I zoom out, guys, it is a very good looking chart. We have an upward sloping 200 DMA, upward sloping 100 DMA, the same thing for the 20 DMA, and the 5 DMA is clearly upward sloping as well. A bear of Palantir would argue that this push to the upside has been very violent, but this is a momentum stock, guys. When this stock starts to push higher, you guys know that there's no overhead resistance or whatever. So Palantir has gone up 38% since its last earnings report. So I'm thinking, guys, and my calls expire in December, so I still have some time here. Let me put up here the 3-year chart. I'm thinking that if Palantir, Palantir can take out its most recent 52-week high near $21, we have another potential gap up to, up to a former area of support near $23. That could be some sort of greedy price target. And I am not pumping out Palantir here, guys. But I think that if this Santa Claus rally and, I don't know, Thanksgiving rally and whatever, the Fed is done rally keeps going, Palantir could be climbing back up to $23. This is a former support back from October of 2021. So the chart looks good. we can make the case that this most recent push to the upside is a bit extended. Yeah, we can make that case. But when this stock trades on good volume and momentum, guys, the moon is the limit. And ask the knives for the further details. This is the Messi of artificial intelligence. We're heading to the moon, baby. Okay, if we take a look at the market structure of Palantir. Let me take a look over here. Palantir. There you go. Let me take a look at the market. I am bullish on this stock short term. Okay? I am not going to be investing money, for the long term in this company. But the chart looks bullish and we have good momentum. Okay, take a look. The demand is through the roof. The supply is starting to rise, but it is way below the demand. And take a look at the market structure sentiment that we have over here, guys. 10 out of 10. I think that we have an appointment. I think that we choose to go to the moon, guys. Alrighty. That's my plan in the case of Palantir. I mean, if we see some sort of retracement in the markets, guys, and if this 5-day moving average happens to be definitely lost as support, then, I don't know, keep an eye on maybe $18.40. This is a previous resistance that could be acting as a new support, and maybe Palantir could be bouncing back up from here. What expiration date for those calls? Those calls expire on, let me see if I can pull it up here. In my other laptop, let me see, because I have this position in a different portfolio, guys. So, let me see. It is late December, I think, if I am not mistaken, guys. December 22nd. Yeah. I'm already in the money, by the way, because I bought those calls in the money. $18 calls. There you go. That's the best, Garrett says. Okay. What other stock do we have over here, guys? Walmart. By the way, let me tell you something about Walmart, guys. We are 47 minutes in. Okay. This was, I went over the report. You guys know that I like fundamental analysis and stuff like that. I love it, taking a look at income statements and earnings reports and cash flow statements. I love it, guys. I do it. Okay. I went over the report. It was a very decent report, even though the bar was lowered significantly for Walmart, but it was a good report. However, the valuation of the stock is a bit expensive. So despite the fact that this was a very decent report, the stock got killed. If you want to buy the dip on Walmart, keep in mind that this stock has a huge, but I mean a massive institutional participation. So what does that imply? That whenever we see a huge move to either the upside or the downside, when it comes to a stock of a company that has a huge institutional participation, most institutions, guys, take up to 2 or 3 trading sessions in order to decide what they are going to do with that position. So, as of now, we have a bunch of hedge fund managers and stuff like that calling their customers. Hey, what do we do with Walmart? Do you want me to lock in the profit? We are making some money. Do you want me to buy more? So if you want to buy the dip over here, ideally, you should wait for 2 trading sessions before buying the dip, because this stock can keep going lower if most of the institutions out there decide that this is a good time to trim their positions in Walmart. So keep that in mind, guys, okay? When it comes to the technical chart, a huge drop, obviously. If I wanted to buy this dip, guys, and taking into account that the only, let me draw a line over here. Take a look. So the next, I said the only, I am taking that back. The next important line of defense for the bulls over here is going to be this upward sloping 200-day moving average. So get this, guys. This upward sloping 200 DMA happens to coincide with a previous support for Walmart back from early October, previous support back from July, previous resistance back from early May, and also a previous resistance back from late April. this is a very important support for Walmart, and Mrs. Market knows about it. We have the convergence of multiple previous areas of support and resistance with an upward sloping 200-day moving average. So a further drop in the case of Walmart and a potential visit down to $154-ish, we can round it up, in my opinion, could be a buy the dip opportunity. On the flip side, if Walmart happens to recapture, and this would be the trade with which I would be feeling more comfortable, because you guys know that I don't like to trade not good looking charts. Let's just put it that way. Let's say that the dip gets bought up tomorrow or in the next few days, and the bulls of Walmart recapture this upward sloping 100-day moving average. Let's say that they can close candles above $160. I would be a buyer of Walmart if that were the case. From $161-ish, once we confirmed support over here, up to the 20-day moving average, we have a 1.69% profit trade, and up to the next or the second gap that I can visualize over here, $165, we have a 3% profit trade. So these are the scenarios that I would be keeping an eye on Walmart. I'm not going to go over the market structure because these market structure charts, let's say that are reset every 24 hours. So I don't have I need to take a look at it tomorrow because Walmart posted earnings today. So the market structure chart is going to be showing me the correlation between buyers and sellers of Walmart from yesterday. So I need to see that correlation as of today. So I'm not going to take a look at the market structure of Walmart. Alrighty. What other requests do I have over here, guys? AMD. Let's go ahead and take a look at AMD. Sure. Okay. 52 minutes in, guys. Okay. Advanced micro devices. Okay, AMD. It goes up today 1.55%, and it closed the trading session at $119.83. This is an uptrend, guys. Very clearly. So AMD is trading above all the moving averages, and on top of that, we have an upward sloping 5-day moving average. This chart is under the total control of buyers. So this is an easy one, guys. AMD keeps consolidating, above 119 bucks. We have $124 pretty much coming up, guys. Very good looking chart. And on top of that, Applied Materials just posted earnings. It didn't affect much AMD here. So this is an easy one, guys. I like it a lot. So let's say that AMD closes candles above, again, $119. That, by the way, $119 happens to be a previous resistance back from early August. So we have two potential gaps. The first one, 122, a spot at which AMD failed 2 days ago, and the second potential gap, I should say, to the upside would be 125. So from 119-ish up to 122, this could represent a 2.69% profit trade, and up to the second gap that I just told you guys about, 125-ish, we have a 5% profit trade. Very, but very good looking chart for AMD, no doubt about it. Let me reconcile this with the market structure of advanced micro devices. Let me see. And take a look, guys. The imbalance, guys, between buyers and sellers, so between the demand and the supply, couldn't look any better. Take a look at the demand, guys. The buyers through the roof. Whereas the supply or sellers is decreasing and below average. Super bullish short for AMD. So higher prices might be coming up. And obviously, guys, you know the deal. Tomorrow we have options expirations, monthly options expirations. So if the market makers decide to kill the tape and stuff like that, obviously AMD could be potentially trading below the 5-day moving average. But in regular market conditions, it looks like AMD has an appointment with higher prices. That's the main message that I want to deliver over here. Primarily buying in the money. I buy in the money all of the time, Darren. All of the time. Always in the money because I have a better delta. Yeah, always in the money. No, I'm not at the money, but at the money looks good. Yeah, at the money could also work. Yeah, sure, absolutely. Amazing Amazon. By the way, guys, we got bad news about Carvana because now Amazon is going to start selling pre-owned vehicles, and Carvana got killed. I heard a bit before going live for you guys that the CEO was about to come on the air on CNBC, and I guess that he's going to try to dissimulate the fact that this is bad news for Carvana. In the case of Amazon, goes down 0.26% today and closed the trading session at $142.83. Clear uptrend, and the bulls closed today's trading session slightly below the 5-day moving average, but this is a super clear uptrend, guys. We can make the case that yes, that since its last earnings report, Amazon has gone up a lot because it has gone up 21% in a matter of a few trading sessions, or I don't know, a few weeks. So we can make the case that Amazon is quote unquote overextended to the upside, but this is a very good looking chart, guys. Amazon tomorrow closes candles above this upward sloping 5-day moving average, above $143, which happens to be, by the way, a previous resistance back from early September, and also a previous resistance back from early August. I am grabbing calls in regular market conditions, because if that were the case, guys, this could be signaling that the bulls are gathering momentum in order to fill these next two gaps. Let's just put it that way. The first one up to $146. This is a previous resistance back from mid-September, and the second gap up to $148, previous resistance back from yesterday. So let's say that we grab some calls or shares or whatever you want to grab at 144.30 up to 145.96. This could represent a 1% profit trade, and up to $148. Sorry, I lost here So from $142 up to $147.50, this could represent a 2.26% profit trade. Very good looking chart. No doubt about it. Let me reconcile this with the market structure of Amazon. Let me see. I'm shorting it, obviously. That is why I'm saying RSI looking strong. Okay. The demand is starting to fall, but the supply is also falling, guys. So what stock are you shorting, bro? Amazon? You look bearish. I know it doesn't look bearish at all. But mind you, I'm not going to ruin your day. Since we are talking about the 5-day moving average, say that tomorrow Amazon fails at recapturing this 5-day moving average, it could be retracing, a bit further, maybe down to 138, which is a previous resistance back from early November. Yeah, this could also be a potential scenario. The chart looks bullish, so I wouldn't short it, but Okay, guys, 58 minutes in. Thank you very much for watching. Thank you very much for listening. And tomorrow we have OPEX, monthly options expiration. I hope for us to be able to have more fun relative to today's trading session, because today, guys, we couldn't do much. It was really a boring, narrow ranging day. But tomorrow we are going to have fun, more likely than not. Thank you very much, guys. Remember, I will ask you for a favor. The comments that you drop on the live chat, don't make it to the stream that I am going to release openly on my YouTube channel. So if you don't mind going to my YouTube channel, dropping a comment, thanks Salvador, whatever, and hit the like button and stuff like that, then that's all I can ask you guys. okay, as a favor. So thank you very much, guys. And let's kill it tomorrow, okay? Bye. Enjoy the rest of your day. I'm going to grab a beer. Go grab a beer, guys. Bye. Thank you.